Morning, everyone. I'd like to call the meeting to order and acknowledge we're in Treaty 1 and Dakota Nation's territory and the traditional homeland of the Métis Nation. I'll introduce the members of the panel today. In the North Committee room is Mr. Doug Marks, and joining us remotely is Ms. Lynn Nesbitt. The secretary for today's hearing is Ms. Sally Caulfield, and representing the City of Winnipeg Assessment Taxation Department is Ms. Lindsay Warman. Please note that all staff, panel members, and hearing participants appearing in person are to remain masked for the duration of the meeting, other than while actively drinking. For the Zoom participants of the hearing, please note you are placed in the waiting room until your property is called upon. When it's your turn, you'll be admitted into the meeting. Kindly follow along on the City of Winnipeg's Board of Revision YouTube channel for the hearing process. Once the host admits you into the hearing, please close or mute your YouTube player. You'll then be permitted to speak with respect to your property, and once your hearing is concluded, you can leave the meeting. We'll be hearing applications for revision of the assessment rule in accordance with the Municipal Assessment Act. The matters for which revision is requested have been described in each application and will limit discussion to those matters. The statements that are made at this hearing are sworn testimony, and anyone speaking to the matters must be sworn in. Please be advised that comparisons of assessments of properties are not considered evidence of market value by the Board of Revision. The Board of Revision is appointed annually by Council, and it's independent of it and the City Administration. It makes its decisions on the basis of the evidence provided at this hearing and issues a written order that will be mailed to all parties as soon as possible. Please note that the board's decisions with respect to an application may be appealed to the Manitoba Municipal Board if the matter pertains to assessed value or classification, or to the Court of Queen's Bench if the matter pertains to the application of exemptions from taxation. Should you wish to appeal, information on how to do so will be included with the board's order. With respect to the hearing process, I'll confirm the points of appeal with the property to be addressed following the swearing in. We'll then have the assessor's testimony followed by questions the applicant may have, and then the applicant's testimony followed by questions. Each side will have an opportunity to summarize if they so wish. Once all of the evidence about an application has been brought forward, the applicant may leave, and the process will repeat for each item on the docket today. The session will close after all the applications have been heard, and the board will deliberate in private and make its decisions. You'll receive the board's decision by registered mail as soon as possible. Just as information, all public hearings are live streamed, recorded, and will be part of the public record. We'll be hearing items 1 to 5 on our docket today. Sally, if you would please affirm the assessor's and applicant's testimony.
Madam Assessor, could you please state your full name?
Lindsay Elliott Wareham.
You affirm that the evidence you are about to give at this hearing is the truth, the whole truth, and nothing but the truth.
I do.
Mr. Story, could you state your full name, please?
Sid Story.
Do you affirm that the evidence you are about to give at this hearing is the truth, the whole truth, and nothing but the truth?
Yes, I do.
Thank you.
Thank you. Morning, Mr. Story. You're here representing the businesses for 4 properties, and we're dealing with the amount of assessed value, the annual rental value. Is that correct?
That's correct. There's actually one property has 3 business roles, business assessments.
Right.
So there's actually, and the first 1412, we notified the board, but we just like that confirmed.
Okay, thank you. We will deal with 1412 McPhillips first then, and because you are asking for a confirmation on this, Ms. Assessor will hear your evidence briefly, please, on 1412 McPhillips. Make sure you read in the file number, the business assessment role, and just the particulars of the assessment, please.
Thank you. So we're looking at file number 21454. The roll year is 2022. The address is 1412 McPhillips Street. The business assessment ID is 33336. The business name is Jim Gauthier Collision Center, and the owner is Ranjoy Sales and Leasing Limited. And the total annual rental value is $217,908, and we're requesting to maintain that annual rental value based on the 2020 Board of Revision decision.
I thank you. So, Mr. Story, you don't have any questions or concerns regarding that then?
No, we do not. The assessor has
Right.
made an adjustment to it, and we're happy with it.
Okay, thank you. Mr. Marks, any questions or concerns regarding this?
None, thank you.
Thank you. Ms. Nesbitt, questions or concerns?
No questions.
Okay, thank you. So we can move on to item 2. That being, well, we have 3 business premises for 1100 Templeton. So the first one we'll deal with is 54466. So when you're ready, Mrs. Assessor, we'll hear from you, please.
Thank you,
Mr. Chairman?
Yes.
We're going to request confirmation of these 3 as well, please.
Oh, on all of them?
Yes, all of them.
Okay, thank you. So once again, Mrs. Assessor, if you would just read the particulars in, please, the file number, the business assessment ID, the value, and how it was arrived at, please.
Okay. So we're looking at file number 21-456. The roll year is 2022. The address is 1100 Templeton Avenue, and the business assessment ID is previously stated as 54466. This business is a budget rental car, and the owner is Ranjoy Sales and Leasing Limited. The total annual rental value is $73,380. The premise area is $3,872. The base ARV per square foot is $16.50. Plus occupancy costs comes to our total annual rental value of $73,380. And we're requesting to maintain that annual rental value. On page 2, you'll see my comparables. On page 3, you'll see the subject property aerial photo. On page 4, you'll see subject property photos and particulars. Then we have on page 5, the 2020 Board of Revision decision and the remainder of their brief.
Thank you. Mr. Story, no questions or concerns?
No, thank you.
Thank you. Mr. Marks, questions or concerns?
None, thank you.
Thank you. Ms. Nesbitt, questions or concerns?
No questions or
Thank you.
concerns.
Thank you. So we can move on to item 3 then, please. When you're ready, Mrs. Assessor.
We're looking at file number 21-449, roll year 2022. Address again is 1100 Templeton Avenue. The business assessment ID is 54467. The owner is Jim Gauthier Buick GMC Limited, and this is a collision center for the Jim Gauthier Buick GMC Limited. We have a total annual rental value of $313,560. We have a total area of 18,500 square feet, and I'm requesting to maintain the 2022 annual rental value of $313,560.
Thank you. Mr. Story, questions or concerns?
No, I'm fine. Thank you, sir.
Thank you. Mr. Marks, questions or concerns?
Nothing for me, thank you.
Thank you. Ms. Nesbitt, questions or concerns?
No, thank you.
Okay, thank you. So we can move on to item 4 then, please.
Thank you, Mr. Chairman. We're looking at file number 21455, roll year 2022. Again, the address is 1100 Templeton Avenue. The business assessment ID is 54468. The owner is Jim Gauthier Chevrolet Limited. This is the Jim Gauthier Chevrolet Collision Center. The premise area is 26,572 square feet with a total annual rental value of $438,960. And we're requesting to maintain that 2022 annual rental value.
Thank you. Mr. Story, no questions or concerns?
No, I'm fine. Thank you, Mr. Chair.
Thank you. Mr. Marks, questions or
Nothing for me,
concerns?
thank you.
Thank you. And Ms. Nesbitt?
No, thank you.
Okay, thank you. So that will conclude your properties, Mr. Story.
Thank you very much.
Thank you for your participation today, and
Thank you
the orders will come out in due course. Thank you.
very much. Have a good day.
Thank you, Mr. Story.
Thanks very much.
Thank
Thank
you.
you.
Thank you.
Ms. Cottville,
Yes?
my SharePoint doesn't seem to come up with evidence on the next item, item 5 for Part Forks. I don't have any evidence for either the assessor or the applicant. Is it possible for you to email that to me?
I will do that right now.
I thank you.
I did also send in some rebuttal this morning at 8:30, so there should also be some rebuttal as well.
Okay.
Would you like me to distribute that now?
Mr. Reimer has seen it already numerous times, so yes, you can distribute it now to everybody.
Just to confirm, Ms. Wareham, that is the same as the previous 2 hearings, correct?
It'll be the same, but it'll have that additional board order from Ms. Martin's hearing from the other day as well. But other than that, it's identical.
So you would have no issues with it, Mr. Reimer?
I have no issues with the rebuttal, no.
Okay. Yeah, if you would do that as well, then please, Ms. Caulfield. If you send me the evidence and the rebuttal to the other parties, please.
Right, everyone should have it now.
Not yet.
I emailed it to you, Lynn.
Okay. I don't have it yet. There, now I got it.
Sorry, I'm just downloading now, so. Okay.
Would you like-
Does everyone have the evidence and the rebuttal?
Yeah.
Okay,
Mr. Chair, would you like me to affirm Mr. Reimer?
I would, please.
Okay, thank you. Mr. Reimer, please state your full name.
Jerry Ralph Reimer?
Do you affirm that the evidence you are about to give at this hearing is the truth, the whole truth, and nothing but the truth?
I do.
Thank you.
Morning, Mr. Reimer.
Good morning.
You're here representing the business premise at Part Forks Main Street, and it's the quantum and liability that we're dealing with. Is that correct?
That's correct, with a bit of a wrinkle. In terms of the quantum of the current assessment, we do not take issue with that. It's actually more a question of liability to assessment, or in the alternative.
Okay, so therefore what we will do is we'll hear the assessor's evidence on the quantum first, and then we will hear...
exemption.
Sorry, you're freezing up on me here.
You know what? I apologize. I'm gonna turn my difference. Can everyone hear me now? Because if this happened the other day, and then I might just dial in if it continues.
Okay. Yeah, I can hear you. Everyone can hear Mr. Reimer?
Yes.
Thank you. So just to reiterate, we don't actually have any concerns with the quantum of the assessment as it's been assessed. The issue is more liability to assessment, or in the alternative.
Are you planning on withdrawing the quantum, or did you still want that heard?
From business taxes. No, we'll have the
sorry?
quantum still at issue because of the nature, and this will become, we'll still have the quantum at
Okay.
issue. But I don't expect to ask Ms. Wareham any questions with respect to the actual quantum at this stage.
Okay, thank you. So, Ms. Assessor, once again, if you would give us the evidence on the quantum, and it can be a brief presentation.
Sure. Thank you, Mr. Chairman. The file number is 21432. The roll year is 2022. The address is Main Street. The business assessment ID is 35215. This is the parking structure under the rail line by the CN station at the Forks there, and then the owner is FNP Parking Limited. We have a total annual rental value of $85,680. This is heated parking. We have 70 stalls at a monthly net unit rent of $102 a stall for a total annual rental value of $85,680. The remainder of my brief is all of the supporting documentation for that quantum.
Thank you. So you stated, Mr. Reimer, you have no questions or concerns?
No questions on the assessor's evidence. No.
Thank you. Mr. Marks, questions or concerns?
No questions for me, thank you.
Thank you. And Ms. Nesbitt, questions or concerns?
None, thank you.
Okay, I thank you. Okay, so on the liability issue, the onus will be on you, Mr. Reimer. So when you're ready, we will hear your evidence, please.
Certainly. And so the evidence of liability to assessment and or exemption from taxation, the whole thing will flow back from the same submission.
Okay, thank you.
And I'm a little concerned because this happened to me the other day. It's freezing up even on it when I'm on. So if I'll be reading from my screen, but if I start freezing up, I'll try and glance back at this screen every once in a while, and if someone can just give me a signal that it's not coming through, then I will. I'll just try dialing in. For the moment, though, and the page number references I'm going to reference are the actual PDF page numbers, as opposed to the page numbers in the brief itself, please. Okay, so going to page 2 then. So this is the one of the parking business assessments for FNP Parking Limited. FNP Parking Limited is a sub of Npdc. That is going to become very germane to the issue, and I'll explain that. You can see there, we're actually requesting that the business assessment be reduced to 0. In the alternative, we're asking for the business, an exemption from business taxes, though for the reasons I'll speak to, I actually think the correct approach would be to consider these premises as not assessable and therefore should be at 0 or removed from the roll. So at the bottom of page 2, there's the, just by way of brief summary, there's the governance management statements for Npdc and its affiliates. Npdc is a not-for-profit corporation. It's actually a community development corporation that is owned equally by the federal government, provincial government, and City of Winnipeg. So those are the 3 and only 3 shareholders of this corporation. Now, there's also another sort of similar corporation, the Forks Renewal Corporation, and it's a wholly owned subsidiary of Npdc. They were incorporated in 1987, and of course, they're also involved with social and economic objectives that Npdc is also involved with. And the operations of those 2 corporations merged in '94 to form the Forks North Portage Partnership. So as far as sort of the way that these things got started and the way that they've evolved, that's a quick summary on those fronts. The legislation, so there's, as you'll hear, Mr. Chairman, from our submission, we're suggesting that the legislative intent is very clear that if you've got an entity that is not operated, and the precise term that you'll hear from me is preponderant purpose. So if the entity is not operated for the preponderant purpose of making a profit, they shouldn't be assessed. There's a number of different actually clues as to legislative intent. The first couple you'll see there under the Municipal Assessment Act and under Section 29, it talks about levying a business tax on persons who engage in occupation or profession, enterprise, or livelihood for the purpose of making money for profit. Now, that section doesn't specifically apply to City of Winnipeg, but it's a very important, I'd suggest.
I'm sorry, Mr. Reimer
is thinking in terms of how these.
Mr. Reimer, I'm sorry to interrupt,
Yes.
but you are breaking
Yes.
up quite a bit.
Okay. I will, with the board's permission, and I will briefly shut down, and I will try the dial-in number.
Okay, thank you.
Thank you.
Would you like to go to a quick recess, Mr. Chair?
We can do 5 minutes, sure.
Okay, thank you.
Thank you. I will call the
All right.
hearing back to order. Mr. Reimer, you were presenting your evidence on liability. You were just in the applicable legislation. I don't know whether you wanted to just resume where you were or whether you wanted to back up a couple of steps. It's up to you.
Perhaps I'll just back up 2 steps.
Okay.
If we could go briefly to page 2, just very briefly, again, in summary, what we're suggesting, Mr. Chairman, is that either the business assessment should be reduced to 0, or in the alternative, we're suggesting that this entity should be exempt from business tax. So as I mentioned earlier, and I don't know how much of this came through, so I'll go through it very quickly. Npdc, North Portage Development Corporation, is a community development corporation that was incorporated in 1983 with the objective for implementing the redevelopment of the North Portage area. That corporation is owned by 3 shareholders equally: the federal government, provincial government, and City of Winnipeg. Forks Renewal Corporation is a wholly owned subsidiary of Npdc, and they were incorporated in 1987. Their objective is to implement redevelopment initiatives on the former CN East Yards area. And those 2 corporations, the operation of those 2 were merged in 1984 to form the Forks North Portage Partnership. So that's how the general corporate structure that we're going to see this morning started up. So I had mentioned earlier that, of course, the 2 submissions we have, either to rule that the business premises is not accessible or that the premises should be exempt from business taxes. There's a couple of clues as to how we came to that conclusion. In the Municipal Assessment Act, Section 29 is the starting point for business assessments outside of the City of Winnipeg, and it states that where business tax where the bylaws passed for the purposes of a business tax, the council shall levy on persons who engage in occupation, art, profession, enterprise, or livelihood for the purpose of making money for profit. Those are the entities that should be taxed for business tax purposes. And that's an important phrasing. Now, this provision doesn't specifically apply to the City of Winnipeg, and I'll explain shortly as to how this ties into the legislative scheme. But it is, I suggest to you, a very important indicator of how the legislature was viewing these kinds of entities in terms of the business assessment or business tax. In Section 30, there is another exemption that is explicitly laid out, and it states that the business premises of a political, friendly, trade, professional, or labor organization or association, whether or not incorporated, where the organization or association is not operated for profit or for the personal gain of its members, is exempt from the imposition of a business tax. Now, Forks North Portage and North Portage Development Corporation, if they had business premises in a municipality outside of Winnipeg, I'd suggest to you there's a very good chance they would fall under this section and shouldn't be taxed as well, as one could certainly view them as either a political or trade organization, given the nature of their objectives and their operations. More importantly, though, now I'm on page 4, and this is in the City of Winnipeg Charter. So the City of Winnipeg Charter provides for the authority to assess persons under 316, and 316 sub 2 states that subject to subsection 3, premises used or occupied by a person for carrying on a business in the city must be assessed for business assessment at a sum equal to the annual rental value. So that's, of course, the starting point for the entire business assessment role. This is the important exception, and this is the section that I'm going to be very much focusing in on, Mr. Chairman, 316 sub 3. And it states that subsection 2, the business assessment, and who's assessable, subsection 2 does not apply to premises, and subsection B is the key here, the use of which is not for the preponderant purpose of earning a profit. I'm going to talk about the corporate structure and talk about the fact that FNP Parking is a wholly owned subsidiary of Npdc and how that ties into this section in our submission this morning. So that's the key section that I wanted to draw to the board's attention with respect to the business assessment role. Now, I had mentioned briefly that Npdc is incorporated as a community development corporation, and that is the key qualifier that brings NPDC, I'd suggest, and its affiliates under Section 316. These are sections on page 4 from the Corporations Act, and it talks about, this is part 21, which applies to community development corporations. So this talks about the requirements and the legislative framework that those specific corporations operate under. On 262 sub 3, it states that the articles of incorporation shall be in the form the director requires, and in addition shall state that the business of the corporation is restricted to fostering the social and economic development of a municipality or other local area in the province, and state the area in which the corporation is incorporated. So you'll see that NPDC's articles follow this mandate precisely. And then further, though, when one moves to page 5 of our submission, Section 264 is the key section that brings us within Section 316 sub 3 of the Charter. What Section 264 explicitly states is that the corporation to which this part applies, so a community development corporation, shall not make any distribution of profits or make any distribution of capital or assets on a liquidation, dissolution, or otherwise, unless the distribution is approved by order of the Lieutenant Governor and Council. And I can confirm, Mr. Chairman, that, of course, NPDC has never sought nor received such an order, given its mandate. They're obviously required not to distribute the profits, and certainly they've made and do not expect to make any suggestions to the Lieutenant Governor and Council for any distributions of any kind. Would be entirely inconsistent with their entire reason for their existence. So the premise here is the parking lot located in the Forks area, I should say. And as I mentioned, the lot is occupied and assessed in the name of FNP Parking Limited. That is a wholly owned subsidiary of North Portage Development Corporation. And that corporate structure here is key. What we're attaching in our submission this morning, in support of our request, we're attaching the Articles of Incorporation of North Portage Development Corporation, and I'll just refer to them as NPDC. The corporate status for NPDC, confirming shareholders, directors, and officers. We're attaching the articles for FNP Parking Limited, and also the corporate status for FNP. We're also attaching the more detailed profile for NPDC and its affiliates, and that profile confirms the objectives, corporate structure, and or business activities of the corporate family. We're attaching the entire set of the financial statements for 2017 for NPDC, and that's the consolidated statements that includes the results for the entire corporate family, both NPDC and all of its subsidiaries. And then we're also attaching the consolidated income statements for NPDC from 2010 to 2017, again, which includes the operations of the entire corporate family, including the parent company, NPDC. When moving on to page 6, when you review those documents, the corporate structure and status of NPDC and its subsidiaries becomes very clear. NPDC, as I mentioned, is the parent company. Shareholders are the City of Winnipeg, province, and federal government, each own one common share. FNP Parking is a wholly owned subsidiary of NPDC, and that's crucial. It's 100% of the shares are held by NPDC. The directors and officers of FNP Parking are identical to those of NPDC, and that's what one would expect in this kind of structure. And as indicated in note 3 of the financial statements that are attached, NPDC has the rights to any revenue in excess of expenses that's generated by FNP, and in fact, as sole shareholder, it has exclusive rights to that revenue. The operations of NPDC and the Forks Renewal Corporation, as I mentioned, were merged in '94 to form the Forks North Portage Partnership. And the mission here, the mission of the partnership is very instructive here. It states the mission is to act as a catalyst, encouraging activities for people in the downtown area through public and private partnerships, revitalization strategies, and to work to ensure financial self-sufficiency. Financial self-sufficiency is fundamentally different than a preponderant purpose of earning a profit. Two very different perspectives, and financial self-sufficiency certainly makes a lot of sense in the context of this corporate structure, but it reaffirms that the primary goal is not for the predominant purpose of profit, but rather for the other social and economic initiatives that NPDC is involved with. So two very, very different objectives and two very, very different predominant purposes, one would say. And that, to me, is very, very key when one's considering the application of Section 316 sub 3 of the Charter in this case. So I mentioned that one of the crucial points about this is that NPDC is incorporated as a community development corporation under Part 21 of the Corporations Act. The profile of NPDC and the partnership is that I've attached, and this is from the partnership's website. It's very interesting. The NPDC was incorporated in 1983 as a community development corporation. The objective of the corporation is not profits. This is how they frame it. The objective of the corporation is to provide a mechanism for implementing the redevelopment of the North Portage area through a combination of investments by the corporation, private sector, institutions, and government. And the corporation is owned equally by the three levels of government. Moving on to page 7, that same profile states that the Forks Renewal Corporation is a wholly owned subsidiary of NPDC. The objective of the corporation is to provide a mechanism for implementing the redevelopment of the former CN East Yards area through a combination of investments by the corporation, private sector, institutions, and government. So again, the objectives here are very much different than a typical private company whose objective is obviously to make distributions to shareholders and be profitable. The objectives here are very clearly stated to be something other than that, and it's entirely in the realm of social and economic development. And as mentioned, NPDC is explicitly prohibited. Not only is the predominant purpose not profits, they are prohibited from making any distribution of profits or capital or assets absent an order of the Lieutenant Governor and Council, and the reason is clear. Their objectives are not to generate profits and distribute profits. Their objectives are to take any excess revenue and reinvest them as a community development corporation into the social and economic initiatives that are the reason for its very existence in the first place. Again, I've again set forth on pages 7 and page 8 the same sections that I referred to earlier, and the key one being the prohibition on the distribution of profits. Now, I did mention that I included the articles of incorporation. So at the bottom of page 8, there's just the segment from Schedule A of those articles, also in the attachments if you care to go to them. But Schedule A is, again, as per Section 21 of the Corporations Act, they were required to make certain explicit statements as to their business, and they've done so here, where it states that the business of the corporation is restricted to fostering the social and economic development of the North Portage area in the city of Winnipeg, with the boundaries given there. So they are, of course, following the very provisions that do apply to them under Part 21 of the Corporations Act. FNP Parking, and I'm on page 9 now. FNP Parking is a wholly owned subsidiary of NPDC. 100% of the shares of FNP are owned by NPDC, and the directors and officers, of course, are identical between those two companies. Any revenue in excess of expenses, and we take no issue, or we don't have any, certainly we're not trying to suggest that FNP doesn't generate excess revenue over expenses. And as far as defining that as profit, but excess revenue, absolutely. The key, though, it's revenue that is not legally available to be distributed, and it's revenue that is not for the purpose of the personal gain of its members, but rather to be reinvested for the further objectives of the corporation in terms of the social and economic. That is the fundamental distinction. So FNP Parking does generate excess revenue, does generate a certain level of profit, and that money, though, legally and certainly, again, given the corporate structure, legally and the very reason for that structure is to move that money up to NPDC so that it can continue with the objectives that it has as a community development corporation. At the bottom of page 9, then, now I talked about the fact that it's NPDC. Obviously, their reason for their existence is not for the purpose of generating profits year in and year out for the gain of its membership, its shareholders, but rather as a community development corporation with social and economic objectives. The comprehensive statements of income and loss between 2010 and 2017 reinforce that. Some years they generated a significant income. In 2010, for instance, it was $595,000. So that's certainly a substantial amount of income. But as you see over the years, when you look at the aggregate of the income and losses over that 8-year period, the net loss was $143,495.
while that would certainly give investors in the context of a private corporation whose sole purpose, not only predominant, but whose sole purpose is to generate profits and distribute those profits, certainly give pause to an investor to look at something like this in the context, though, of a community development corporation. It very much stands to reason, and it makes perfect sense. Their predominant purpose is not profit, but rather to continue to fulfill their mandate as a community development corporation with social and economic initiatives that it is implementing in the defined areas. So with the, now turning to page 10, and this is the second paragraph, having established then that the primary objective of Npdc and its subs is to promote social and economic development, the next step in the analysis, as I've mentioned briefly earlier, is to determine the taxable status of Npdc and its affiliates or subsidiaries under the Municipal Assessment Act and City of Winnipeg Charter. Now, the Assessment Act, actually, I've brought those sections up and I've kept them in for the purpose of indicating legislative intent. And as mentioned, section 29 and 30, section 29 speaking of entities being taxed for the purpose of making, or their purpose is to make money for profit. Section 30 was the exemptions for certain organizations where it is not operated for profit or the personal gain of its members. To be clear, those sections don't apply to the City of Winnipeg, but they are important clues as to legislative intent. But the key section that does apply, and what I was suggesting that Npdc and its affiliates fall under on page 11 is 316 sub 3, where it states that subsection 2, which is the actual business assessment. So subsection 2 doesn't talk about business taxes. Subsection 2 actually provides for the assessment of premises for the purposes of the business assessment. 316 sub 3 states that subsection 2 does not apply to premises used of which is not for the predominant purpose of earning a profit. So, and what I've suggested, Mr. Chairman, is the term predominant purpose of earning a profit is entirely founded upon the notion of profit, the ability to distribute the profit, the ability to maintain share value, the ability to provide a rate of return for the investor that is going to justify their investment in the company. And it's for those purposes alone that these companies, of course, exist. It's very different than the scenario with Npdc, where their predominant purpose is something entirely different. I'm going to skip over to page 12, 316 sub 3. Unfortunately, the term predominant, or sorry, preponderance, I should say, is not defined in either the Charter or the Municipal Assessment Act, but the dictionary definition is fairly instructive, and it states the definition of preponderance as having superior weight, force, or influence, or greater prevalence. And certainly, if you recall that in the mission statement for the corporate family, the mission is the social and economic objectives while maintaining financial self-sufficiency. Financial self-sufficiency is entirely different than the preponderant purpose of earning a profit, two fundamentally different objectives, and therefore, I'd suggest why Npdc and members of the corporate family should fall within section 316 sub 3 and not be accessible in this case. Summary then is located on page 13. The Npdc corporate family, the Npdc itself is the development corporation governed by Part 21, and by virtue of that, ultimately its subsidiaries are as well, because in the case of FTP parking, the only flow of revenue that is legally permissible would be the flow from FMP to Npdc, at which time, of course, it immediately becomes by Part 21. The preponderant purpose of Npdc is not to make profit, but to promote social and economic development while striving to be financially self-sufficient. Very, very different than predominant purpose of profit. FMP parking as a wholly owned sub may transfer the funds to the parent Npdc and Npdc only as the sole shareholder for Npdc to use for its stated purposes with the same prohibition on the distribution of profit. And of course, when one looks at the results over the 8-year period as expected, it's very close to a break-even proposition in that time, and that's entirely what would be expected in the case of a corporation whose objectives are governed as a community development corporation. So for all those reasons, I am requesting that the business assessment be reduced to 0, or in the alternative, that the business be
Thank you.
Ms. Bora, questions for the applicant?
I do have some questions as well as my rebuttal. Should we go through them at the same time? How would you like to, because it kind of ties together?
Your rebuttal is?
All based on liability that he just went through.
Sure. If it's okay with Mr. Reimer, we'll hear them together.
No, sure.
Okay, please proceed, Ms. Bora.
All right, thank you. So one of my questions I have for Mr. Reimer, you discussed at length that they're not for the preponderant use of earning a profit. And you have referenced a number of sections in the Municipal Assessment Act as well as the Corporations Act, but you also did confirm that the City of Winnipeg Charter does rule. That is what we are specifically looking at, correct? Was the section 316? Yeah, the preponderant use, okay.
Yeah, that's correct.
All right. Now, is Forks North Portage Development Corporation, how is it registered within the company's office? I know you've provided some company searches from the company's office as well, and we have two in our rebuttal, which we'll be going through, but how is it entered on that company registry?
I'm going to go to the precise page, Ms. Worms, so I don't miss, I know exactly what you're asking, but neither do I want to misquote what's on the corporate there we go. North Portage Development Corporation. Mr. Chairman, if you might turn to my page 55, please, in my materials. So this is the return of the corporate search for North Portage Development Corporation, and I believe, Ms. Wareham, what you're asking is under entity type and subtype. It's registered as a business corporation and a Manitoba share corporation.
Okay, thank you. Now, what happens to the profits that these companies make?
They're reinvested by Npdc for the social and economic objectives of that corporation.
And is there any sort of outline about how those profits are reinvested, what they're doing with them, where that money is going?
It will be within broad category, if you recall from their articles, of the social. So now, let me get the exact wording again. Be very precise in this.
I'm wondering if there's any. Sorry.
Page 47. At page 47 of our materials. Recall that, and this is from Npdc's article. The business of the corporation is restricted to fostering the social and economic development of the North Portage area. In the case of the Forks Renewal Corporation, it's the same objectives, but within the geographical area of the Forks. So, I guess, Ms. Wareham, the quick answer would be it's to achieve the broad objectives of social and economic development within the defined areas. That's what their entire mandate is.
So we only have the broad objective of where those profits are going. We don't have any specifics as to what's being done with them, just sort of the mission statement of the company?
Social and economic development, yes. What we have an explicit statement for is there's no distribution of profits. Oh.
Okay. So you talk about profits, they can't distribute them, correct? But they are able to make a profit. We can all agree on that. Is they are making a profit. They're just limited in the distribution.
Absolutely. They're the not so much Npdc, but FNP parking is certainly generating income that exceeds their expenses. So when you define profit as the excess revenue, absolutely they are.
Okay. So we're just going to go through the rebuttal very quickly, and if I need to slow down, please feel free to let me know. So on page 2 of our rebuttal, we just have provided the company search of the North Portage Development Corporation, showing that it's entered at the company's office as a business corporation. If you scroll down to page 5 of the rebuttal, we have FNP Parking Limited. That's the taxable party that we are talking about here today for the particular file number that we're discussing. They are entered as a business corporation as well. Then we have the Forks Renewal Corporation. They're entered on page 8, which is entered as a business corporation as well. And then we have the Forks North Portage Partnership, which has it entered as a business name, showing that this is a partnership. And then what we've done is we've shown a couple company searches for some other companies that are either registered not-for-profit. So on page 13, we have, this is the company that operates the parking at the St. Boniface Hospital, and it's entered at the company's office as a not-for-profit corporation.
Ms. Wareham, can I just clarify, if you read that section, it's actually non-profit corporation, correct?
Yeah, sorry, non-profit. Thank you, Mr. Reimer. We're just trying to show the distinction between what the subjects are registered as the company's office entered as versus what some other properties are as well. So we also have a Darcy's Ark Thrift Store Inc., and it's registered as a non-profit corporation. And then Mr. Reimer's looking to community development corporations. He has referenced that the Npdc is a community development corporation, and their mandates of community development corporations are not for the preponderant purposes of earning a profit. So we've also gone the extra step of looking up other community development corporations to see how they're entered at the company's office as well, to see if there's a distinction or a similarity. And so we have Center Venture Development Corporation on page 17, and they're entered as a non-profit corporation as well. Southeast Resource Development Council Corp on page 19, again, they're registered as a non-profit. North End Community Renewal Corporation on page 21, they're registered as a non-profit corporation as well. On page 24, First Peoples Development Inc., non-profit corporation. And so we see that not all of these that we're looking at, they're not registered charities. I think the first one, the St. Boniface Hospital, is actually a registered charity, so they for sure would be a non-profit corporation. But these other ones are not registered as charities. These aren't registered charities. This is how they're entered in the company's search. Starting on page 26, we've also included the consolidated financial statements for the North Portage Development Corporation as of March 31st, 2018. Mr. Reimer had included an 8-year period between 2010 and 2017, but the reference date is April 1st, 2018. So we felt that this would be appropriate to put in as well. And if you scroll through, just bear with me, I've got a lot of screens open. Yeah. So if you scroll through when we're looking at the financial statements, it shows that the profit, the reference date, Mr. Reimer has referenced a loss, but in actual fact, if you include the financial statements, on page 29, you'll see there's a profit of $690,000, 714. So if you actually add that to the 8-year period Mr. Reimer has presented, it doesn't show a loss of $143,000. It shows a profit of $547,000. So we just wanted to make sure that we're using up-to-date reference information that we're looking at for these. And I don't want to speak for Mr. Reimer, but he's seen all of this and we have discussed this, and I don't think he disagrees with the fact that they have earned a profit, so I'm not going to stick to that point too much. And then we have on page 47 of our rebuttal, we have the excerpts from the Handbook for the Economic Community Development for Community Development Corporations. So this is a handbook that the province has put out that talks about community development corporations and what they're required to do with respect to reporting and things like that. And so on page 10 of the handbook, it talks about their accounting. And it says that government organizations that are classified into 3 types. They can either be a government business enterprise, a government not-for-profit organization, or an other government organization. And they're required to follow different reporting standards. So government business enterprise are required to follow the International Financial Reporting Standards known as the IFRS. Community development corporations do not meet the necessary characteristics required to be considered a government business enterprise. A government not-for-profit organization is required to either use the PSAB or the PSAB with 4,200 not-for-profit series. Other government organizations are required to either use PSAB or FIRS. So the CDC management should discuss with their accounting, and it talks about the accounting framework. So it says not-for-profit organizations, the GNFPOs, do not follow international reporting standards and are required to use specific public sector accounting board not-for-profit series when reporting. So when you look at the 2018 financial reporting that I have included on pages 26 through 46, You'll note that they have said that they are using IFRS. They are not using the reporting standard for a government not-for-profit organization. I even went so far as to look up how Center Venture reports their yearly financial statements, and they do follow the government not-for-profit reporting standards and do not follow the IFRS, which North Portage Development Corporation is using, and it's referenced on, I believe, page 9 of the PDF of the financial statements, and it says, the statements of compliance, the financial statement of the company have been prepared in accordance with the International Financial Reporting Standards as issued by the International Accounting Standards Board. So we're showing that they are not following what the Community Development Corporation Handbook indicates that they should be following for their reporting and accounting. So then we're moving on to pages 48 through 56. This is a Court of Queen's Bench order that we have included that we are not putting a lot of weight on, but we're just saying that the issue is for the preponderant purpose of earning a profit, and that it is important to note that even though this that the judge determined this is a business, and it also says the business may earn a profit. So if Forks North Portage is in a position to make a profit, it would seem that Section 316 of the City of Winnipeg Charter Part 2 would apply, because they are not specifically for the preponderant purpose of earning a profit. They are, in fact, earning a profit. In fact, Forks North Portage, its whole goal is to earn profits for the North Portage Development Corporation. As Forks North Portage is set out, they are intended to earn a profit. That's the preponderant purpose of Forks North Portage, is to earn a profit. And then we move on to pages 57 through 64. This is the Court of Appeal of Manitoba. It's essentially saying that the City of Winnipeg charter, it rules. It takes precedence over the other legislation. So Mr. Reimer has leaned to some definitions and sections of the Municipal Assessment Act as well as the Corporations Act. But the City of Winnipeg speaks specifically to this. So we need to look to the City of Winnipeg charter, which Mr. Reimer does state in his brief. And then we move on to page 65. So this is a Board of Revision order from 2009. This is for one of the business assessment IDs that were in a hearing earlier in last week. Essentially, there was about 6 or 7 files that were operated by Forks North Portage and North Portage Development Corporation. And instead of them all being on one docket, unfortunately, they were all on separate dockets. So this was one of the ones Mr. Reimer has had this discussion with a couple other assessors, and we had worked as a team to discuss all of this to make sure that we were consistent in our approach with how we were looking at these properties. So this is just a Board of Revision order from 2009. This is the last time the liability was appealed for Forks North Portage, and it just says that the panel has made its decision on the evidence given, and that some, sorry, I have to zoom this in because I cannot see, and that some stalls seem to be revenue producing. So, and no subsequent appeals have been filed to the Board of Revision with respect to liability until 2022, and which we're discussing here today. And it has also not been brought up as an issue at the municipal court. I'm fully aware that all hearings are hearing de novos, and that we are not supposed to be relying on other board decisions, but I felt that it prudent to be including the board orders from the previous hearings this week, or last week, I should say, because the evidence has all been the same. Our position has been the same, the rebuttal has been the same, as well as Mr. Reimer's information that has been presented. We believe it's the same issue, and it's all the same company. So we've just included those board orders as well at the end of the brief from a couple files that were heard on the 20th with Mr. Spacek. Another property that was heard on the 18th with Mr. Spacek, and the 20th with Ms. Martins. So that's our rebuttal documentation. And essentially what we're saying is, with the culmination of this information in the CDC handbook and how North Portage Development Corporation consolidates and reports its financials, it seems to further reference our argument that North Portage Development Corporation can make a profit and would want to make a profit to reinvest in its mandate, and is not considered a not-for-profit organization accounting-wise. And we're of the position that they, in fact, are of the preponderant purpose for earning a profit, the Forks North Portage, or FNP Parking Limited. And I'm open to all of Mr. Reimer's questions.
Oh, okay, so that was your rebuttal. Are you going to present your your evidence in chief as well, or is that you're going to rely on just the rebuttal?
Well, because the onus was on Mr. Reimer and we didn't, we didn't submit any evidence for classification. Our rebuttal is our evidence for classification argument.
I thank you. So, Mr. Reimer, questions for
Thanks, Mr. Chair. Thanks, Mr. Chairman. Mr. Chairman, with respect to the prior board decisions that have been submitted, it's been certainly my understanding very clearly from the chairman and various members of the board that prior orders of the board will not be given any weight of any kind. Do I need to address that issue, or is that still the policy of the board?
I believe that's still the policy. So, yes, thank you for bringing that to our attention, but please proceed.
Thank you. So, Ms. Wareham, so actually I'll start with the starting point of that case, page 48, and this is all the PDF page numbers from your rebuttal now. So page 48, this is the Loveday case, and this involved the business assessment and the consideration of section 316. So if one moves to page 53 initially, at paragraph 11, now we can agree that it would appear at paragraph 11, Burton Loveday in cross stated that the intended main purpose of the Loveday Corporation was to make a profit, that it had made a profit each year from 95 to 99. And I don't think you're not suggesting that Loveday was in any way a community development corporation or anything but a private corporation whose very existence was predicated on making a profit, correct?
Correct, and that was not the intent of including this decision in our evidence.
Right, okay, so there's no issue that way. So then, actually, Mr. Chairman, I'm going to respond to the rebuttal. I don't have a further question on it, but I would like the opportunity to respond to
certainly
Ms. Wareham's, which is including this case. So then turning all the way back to, I think I'm going to go to page 2. Yes, indeed. So Ms. Wareham, on page 2, we've got, and we both submitted this. This is the corporate summary for North Portage Development Corporation.
Excuse me just for a moment, Mr. Chair. Could we please call a quick recess?
Yes,
Thank
we will.
you.
Do we need 5 minutes, 10 minutes? What do we need?
I think 5 should be okay.
Okay, thank you.
Okay, so
you.
Ms.
Sorry
Caulfield, I'll
about
dial
that.
back in 5 minutes.
Yes.
Thank you. I'll call the hearing back to order. We're at the point where the assessor has presented her rebuttal evidence, and Mr. Reimer is going to respond to that. And then we would have to have questions for the applicant afterwards, because we have not questioned Mr. Reimer on his primary evidence. So, Mr. Reimer, did you want to respond to the rebuttal first before questioning?
Actually, I just had a couple of more questions on the assessor's rebuttal.
Right. Yep. Go ahead.
Okay. Thank you. So, Ms. Wareham, page 2 then and again, these are page number references to the rebuttal brief. Page 2, we've got North Portage Development Corporation showing as a business Manitoba Share Corporation, correct?
Correct.
Okay. And similarly at page 5, and I won't belabor it, but FNP Parking Limited is also shown in the same manner, correct?
Correct.
Okay. Now, going briefly, and you've got a few companies after that. I'm just going to give the one example because I believe they're all the same. So if one turns to page 13, and I think this is consistent with the other examples you provided, these entities are explicitly categorized as non-profit corporations, correct?
Correct.
And you know what, Mr. Chairman, those are my questions. I'll have in due course, and I don't know if it would be now or later, but I would appreciate the opportunity to respond to the rebuttal. I can do it in summation if that's
okay.
Easiest.
Yeah, that's fine. Thank you. So then, Ms. Wareham, did you have any questions for Mr. Reimer's primary submission? Or
I believe I've gone through most of it. I just had one particular question for Mr. Reimer. And with all due respect to Mr. Reimer, it's not that we don't agree as to that they're making a profit, and it's just whether it meets that preponderant purpose test is where we have that differing opinion. So I just wanted to let the panel know some of my Mr. Reimer's aware of all these questions, but just for the benefit of the panel, I just didn't want to belabor all of this. So Mr. Reimer, you've presented a number of things within respect to the classification and ability to be assessed based on all this legislation. And I believe I know the answer, but I have to ask it anyways. You are aware that there's a particular procedure at the Assessment Taxation Department with respect to requesting classification changes and liability, or I shouldn't say classification, but liability changes. So you are aware that there's a procedure to request an exemption based on liability for business assessment, and there is a process in place for that?
Absolutely. There's an administrative process in addition to one's appeal rights. And yes, we are working through the documentation.
Okay, so you have received the paperwork to submit an application to request an exemption for business assessment and intend on submitting that to our department as well?
I do, Ms. Wehrman. To be clear, recall that I actually believe this is a liability to assessment issue, but if the department and we want to characterize it as an exemption issue, absolutely we'll set that paperwork in and go that route. But I'm not yet convinced it's actually exemption versus liability to assessment. But yes, we will be presenting that information to the department.
Okay, thank you, Mr. Reimer.
Those are your questions then, Ms. Warren?
Yes, thank you, Mr. Chairman.
Thank you. Mr. Marks, did you have any questions for the applicant?
No, my question's been answered. Thank you.
Thank you. Ms. Nesbitt, questions for the applicant?
No, I have no questions either.
Okay, thank you. I have a couple of quick questions. This preponderance definition, you said there's nothing in the legislation, Mr. Reimer. Does Black's Law Dictionary have a definition for preponderance?
I don't know. I haven't tried to look it up in Black's. That's a good question, and the quick answer is I don't know. But certainly, the dictionary definition, the way that I just would think of preponderant is something that's given greater weight than than other things.
Yeah.
And as per the dictionary definition, and that's where I'm coming from on this.
Yeah. No. I appreciate the Merriam-Webster definition. I just wondered if Black's Law Dictionary had a different definition, but that's fine. Thank you. I guess the other question is, and I don't know whether you know the answer to this or not, but on page 7, you talk about the Forks Renewal Corporation. It doesn't specify for Forks North Portage parking or the FNP. I just wondered why that is. They're both subsidiaries, are they not?
They are indeed. They are indeed subsidiaries. I think this is more of a higher level corporate profile where, generally speaking, people are aware of Npdc and also Forks Renewal Corporation. So they didn't go into all of the information in that segment of FNP.
Okay.
Just for the board's reference, the details, like all of the details that I'm referring to there, start on our page 16. That's where the full sort of the full overview is presented, along with the sort of some of the details of the various directors and officers.
Right. And on page 9, I think you conceded that FNP performance wasn't broken out from the North Portage material that you gave us. And sorry,
absolutely not. That's absolutely correct. And to be clear, recall, Mr. Chairman, that it's the consolidated results that are reported, and recall that FNP is wholly owned, of course, by Npdc, 100% of the shares. So the only legal mechanism, or the only legal use of the profits from FNP is to flow up to Npdc for it to fulfill its mandate. Because recall, financial self-sufficiency is certainly at the end of the day, it's the goal of the corporate family. FNP is one of the entities that actually permits Npdc to get in that break-even position. So absolutely right. And again, I want to be very clear on this. No qualms, and Ms. Wareham asked the question too, does FNP make a profit? Absolutely. But the key isn't whether it makes a profit. The key is what you can do, in my respectful submission, with those profits. That's the distinction when you look at predominant purpose and what the predominant purposes of Npdc are at the end of the day.
Thank you. Okay, and Ms. Wareham, you had stated that your rebuttal was basically your formal presentation as well. Is that correct? So you had nothing further to present?
Correct. This is our This is our evidence for the liability argument, as the onus is on the applicant, and this is a BA hearing. So just with evidence, deadlines, and things like that, it's in the form of rebuttal.
Right. So that being said, I guess we're at the point where a summation, Mr. Reimer, do you desire for summation?
Thanks, Mr. Chairman. So initially, the one thing I suggested I'd like to briefly come back to in summation, it's the Loveday case that the department's put into their materials. So if I could impose on the panel members and Ms. Wareham to turn in their submission to page, starting at page 53. And this is the Loveday case. And this is the specific question I had for Ms. Wareham, and she was very forthright in her answer. This, in paragraph 11, it states, in cross-examination, Burton Loveday, president, stated that the intended main purpose of the Loveday Corporation was to make a profit, and that it had made a profit each year from 95 to 99. Now, what flows from this, and the reason that this is important, in the next paragraph, Loveday argued that the preponderant purpose test in 316.3 sub B, which is what we're looking at, relates to the premises and not to the entity using the premises. That was the argument. That is specifically the argument that the court rejected. And the reason it's important, if one then turns to page 54, in the there's a quotation, and in the subparagraph 2, the court states, if one looks at the use of the premises only from the narrow perspective of the physical activity occurring there, then all premises would fall within this exemption and no premises would be subject to association. An interpretation that's absurd and doesn't fit with the object of the legislation. So then moving on to page 55, and this is subparagraph 5. The exemption in 316.3b relates to earning a profit. A profit relates to revenue, expenses, and income. And again, we don't take issue with that, but this is the key. A premises by itself is not capable of receiving revenue, incurring expenses, or having any income. One must have an entity carrying some form of an undertaking to earn a profit. As a result, it makes no sense to relate the exemption to the premises rather than the entity operating on the premises. And the court, of course, rejected Loveday's application. But that's the distinction, Mr. Chairman. Preponderant purposes test relates to the purpose of the entity, which is ultimately, don't forget, Npdc. What are, I should say, the predominant purposes of that entity? Social and economic development. Not predominant purposes are social and economic development, and they are specifically not making a profit, but breaking even. Two very, very different situations, and that's fundamentally why I'm suggesting that Npdc, as the parent company with the social and economic development stated objectives, and with the goal, of course, of being financially self-sufficient, as opposed to seeking funds year in and year out from the three levels of government, certainly a laudable objective to be fulfilling these social and economic purposes while at the same time being self-sufficient. I'm sure we're all wishing that there was more of that with some of the entities that are affiliated with the government. Financial self-sufficiency, though, is a far cry, I submit, from a predominant purpose of earning a profit. I keep saying predominant. preponderant purpose of earning a profit. And therefore suggesting, based on the stated objectives of Npdc and the corporate structure that we have before us, that the business assessment of the subject premise be either set to 0, which I believe is the correct result based on the specific reading of 316, which, don't forget, is authority for the assessment itself, not an exemption, but in the alternative, to declare it exempt from business taxes. The departments equating section 316 sub 3 sub B with non-profit. That is not the test. The term non-profit is used several times in the Municipal Assessment Act, and it's also used in the City of Winnipeg Charter, and the legislature will be well aware of the term non-profit. And if the legislature had intended 316 sub 3 sub B to be restricted to non-profits, they would have said so. That is simply not what they've done, and therefore we're requesting accordingly. Thank you.
I thank you. Ms. Warren, desire for summation?
Yes, please. Thank you, Mr. Chairman. Just to start out discussing the Loveday mushroom case, I think Mr. Reimer is sort of missing the point as why we brought it into evidence. We brought it into evidence to show that the judge defined the term business within the City of Winnipeg Charter. Business is defined as a commercial or merchandising industrial activity or undertaking, a professional trade, occupant, calling of employment, keeping or operating a device or thing, an activity, providing goods or services, whether or not carried on continuously or in an intermittent basis, or whether or not for gain or for profit, and however formed or organized, and includes a cooperative and association of persons. We brought this into evidence to say that the judge did say that if a business may earn a profit, then section 316 of the City of Winnipeg Charter Part B would not apply. And Forks North Portage, the FNP Parking Limited, the business that is being assessed here currently, not North Portage Development Corporation, is in fact earning a profit. The whole point of FNP Parking Limited is to earn a profit. And that is why we brought this into evidence, not whether or not Loveday Mushrooms was a private company and this one wasn't. We understand what North Portage Development Corporation is, a community development organization based on their mission statement that's on their website. But within what we've seen from how it is registered at the company's office, there are shareholders. We understand the shareholder scheme and the fact that they can't distribute any profits. But FNP Parking Limited, its main goal is to earn a profit. The preponderant purpose of FNP Parking Limited is to earn a profit. And so with the culmination of that information, as well as the information that was in the CDC handbook and how the North Portage Development Corporation consolidates and reports its financials, not following that government non-for-profit community development organization accounting standards that's within that CDC handbook, it seems to further reinforce our argument that the Npdc can make a profit, which is also seen in its financials, would want to make a profit to reinvest in its mandate, and therefore is not considered a not-for-profit organization accounting-wise. So we're of the opinion that the preponderant purpose of this specific business, FNP Parking Limited, is to earn a profit. This is a parking operation where people can get monthly parking. It is adjacent to the Forks site, but it is a parking structure that is under the CN rail, and the whole point of it and the preponderant purpose is to earn a profit, regardless of where that money is going. And so that's our summation. Thank you.
I thank you. Well, I thank you both for your presentations. Our decisions will be forthcoming. We have heard all the items that are scheduled, and this hearing is now adjourned.
Thank you.
Thank you.
Thank you, everyone.
Thank you.